Good morning and welcome to Unusual Activity, powered by Financial Juice with George Avedon and Milton Marmonides. Thank you for joining us this morning. Just out, we have CPI. Let's jump into things. CPI climbs 0.1, estimated was 0.0. So again, CPI climbs 0.1, estimated 0.0. Year over year, CPI for September was 1.7 versus 1.6 estimated. Prior was 1.7. Core CPI month over month for September 0.1 versus 0.10 estimated prior was 0.0. So looks like a slight increase in the CPI. We have the futures still lower by 2. They were lower by about 2.25 coming into the number. We have 1936.25 currently, and right around that still -2 number. So we'll see how that translates that into in pre-market and certainly as the market begins to open. So let's jump into how the market did yesterday. A quick recap. Certainly a positive day across the board yesterday in the U.S. Dow Jones finished at 16,614.81, up 1.31%. S&P 500 finished at 1941.28, up 1.96. Nasdaq at 4419.48, up 2.40%. Certainly we had a risk on trade in the morning. Certainly we had from Monday after hours, we had Apple's positive earnings. Certainly propelled the market. So if you're taking a look at the chart, it was a slow and steady climb most of the day and into the close. So again, we'll get into the specifics of the technicals and what that could mean coming into the market. Again, futures are still down too, so not much of a impact from the CPI numbers going into so far in the pre-market. So let's jump into what's happening on the geopolitical side and the global level. Certainly discussions of Turkey, the border, ISIS, ISIL, airstrikes over Syria. Is it doing enough? Is there a possibility of boots on the ground, if you will, troops on the ground? Keep in mind, in the U.S., we're coming up to the midterm elections, so that's that circus is taking place. But again, that's we'll see what happens after the elections, whether or not we could see potentially troops on the ground with respect to ISIS, ISIL. Continuing discussion of the Russian economy, certainly its relationship with Europe, Western Europe specifically, with respect to sanctions, impact on the Eastern European economies, relationship with China. Remember, Ukraine parliamentary elections are on the 26th. Also, there's certainly the ceasefire in place, and news coming out overnight that Russia has raised further conditions for resuming gas supplies to the Ukraine. So again, we still have this ongoing, wrangling between Ukraine and Russia, and that's most likely will continue. We'll see how that turns out. So again, jumping into macroeconomic news in the U.S. specifically, the Mortgage Bankers Association purchase applications, the composite index, were higher by 11.6 versus higher by 5.6 last week. Remember, these are purchase applications. Just remember, last week we had that really significant drop in the 10-year yield, which typically is the bellwether, the leading indicator, if you will, for mortgage rates. So that there was a bit of a resurgence in both refi and purchase applications. So again, keeping an eye on that. Certainly, we had the consumer price index at 8:30. Again, CPI climbs 0.1 versus the expected 0.0. Month-over-month core CPI for September 0.10 versus the 0.10 estimated prior 0.0. We have futures actually just almost flat now, actually down 0.75. So again, minor moves, but we'll see how that translates into the open. EIA petroleum reserves out at 10:30. Certainly with crude oil being lower, special attention is being paid to this. It is an important number to monitor. Lots of information coming out of OPEC, and specifically now, as we've discussed over the last few weeks, more of this conversation on what are these oil prices doing to specific countries where they're having difficulty diversifying not their revenues, not being based just on energy and commodities. For example, Russia, Iran, Saudi Arabia, Venezuela, and so forth. So again, that's really something to keep in mind. Baltic Dry Index rises 4.2%. So we do see a kind of a 2-day in a row rise here to 1,136 points. No POMO today, and for just interest, we've posted in this particular presentation just you see the POMO chart here, right here, the POMO chart. So it's ending in October, excuse me, ending in October, and you see this this chart showing specifically in October, day by day, and so again, just an interesting chart to take a look at. We'll put that into the repository for you folks. Taking a look at overnight markets, Asia up, Nikkei was up 2.64, Hang Seng was up 1.37%, all percent. Shanghai down 0.56%, so slightly mixed in Asia. Moving into Europe, we were more or less flat earlier. We had a little bit of a tick up. Slight tick up in indices here. FTSE higher by 0.21%. CAC in Paris higher by 0.25%. DAX higher by 0.31%. IBEX more or less flat, higher by 0.08%. So slight increase in sentiment in Europe, but we'll see where the S&P 500 futures take us into the market. A few things coming out of Europe. Bank of England's Charney commenting that the EU weakness may preclude from increasing interest rates. We've discussed this concept before, where Western Europe is signaling, figures are signaling that they're pointing to a slowdown. And this is on the heels of Chinese GDP comfortable with being slower growth, not slow growth, slower growth. Also, conversation about currency reductions are pointing to competitive natures of countries to compete in the importing arena. Basically, countries want to make sure their currencies are attractive for importing purposes, in a sense avoiding deflation. A lot of deflation conversations within the last couple of days. We have slowing inflation points to other risks as well. We mentioned deflation, so certainly with CPI coming in at slightly higher than anticipated, 0.1, not a huge number there, nothing uh, staggering there. Australia inflation gauge rose 0.4%. Also, remember, we've had over the last week or so, we've had a string of downgrades on sovereign ratings, including Russia. We discussed that the other day, so that's something we're keeping an eye on. So there is this global support to keep monetary policy steady. The one thing, and we brought this up yesterday, is this notion of central bankers. Our notion is that the last thing they want to do is to spook the markets, right? So that's something to keep an eye on. Also, very interesting, China, the premier indicating that they're going to release a new jobless rate indicator, which should provide a little bit more color to the Chinese economy. So again, that's interesting to note. Let's take a check on commodities, energy, and raw materials. Crude oil higher this morning by 20 cents, 21 cents at $82 and $82.73 currently. We have gasoline lower by 0.0024 at 2.2110. Heating oil higher 0.0069 at 2.5201. We have gold lower by $6.60 at 12.45 and 10 cents, and natural gas lower by 0.02 at 3.690. Silver at 17.38, lower this morning. Platinum also lower, 12.71. 38. Cocoa is lower as well. Certainly, cocoa again. We put that in. Ebola-stricken countries, excuse me, are large cocoa producers. So it's good to keep an eye on that. And should news come out of that, interesting to monitor there. On the rate environment, we have the 10-year at 2.209, slight increase in yield from this morning. 30-year yield at 2.97. We still have that steepening yield curve towards the longer maturities, which typically stipulates an expansion. Before we head into diving into specific stocks, Milt, let's go over yesterday's day if we could. Anything that we've seen, we've discussed this, a change of sentiment. It seems as though I dare say tempers have subsided, volatility has subsided. Earnings are not stellar, but at the same time, we're getting companies that are beating estimates. Your view of yesterday's markets, what did you see? What are we looking at this morning?
Well, yesterday we had a very complacent market to the upside. Volume was very thin, and we had a lot of technical levels were broken. We always focus a lot on technicals, and keep in mind that when we give our levels, it's a level where we believe the market has resistance support or any type of tradable areas. Yesterday's moves, like we mentioned, were very thin. The volume really wasn't there throughout the day. In the morning we had a little rush, but other than that, volume was tight. moves were pretty much extreme. The Nasdaq was up what, like 2 point something percent, George, I believe.
Correct. Large moves, large positive moves.
Yeah. So it's a it was a very interesting day. You had IBM, going over a few things. IBM was down again yesterday. From what I was reading, some research things that this was one of the fourth or fifth time in history that IBM was down this much and the market was actually up over 100 plus points. So it's a very tough market. It's very individual. A lot of names across the board were not acting positive in that type of environment. Case in point, Google was only up what 0.5, 0.6% yesterday, and the S&P, the comp was up over 2%. So you're having a lot of interesting moves, and sometimes people need to evaluate that and figure out what is the realization behind that. Complacency is back in this market. Everything has been brushed away. We mentioned Ebola's, Europe. What's going on in the Ukraine and Russia. Everything does not matter anymore. Right now, everyone is just focused on the market going higher. It's it's kind of shocking that we had a 7, 8, 9% move in 4 days off the bottom. It's 120 plus points on the S&P. What is the reason behind it? Who knows? There was an article the other day on one of the U.S. papers mentioning the fact of the plunge protection team. It's mentioning the fact that there were firms out there buying the market so it would not collapse because they were actually scared. So it's a lot of outside noise going on to substantiate this move. A lot of analysts are out saying to buy it all up again. Where were they when the market dropped 120 points? Who knows, But you're in that environment now where the VIX is back to 16. Volume is drying up. You're having moves that are being intraday moves of 2-3% on indexes is insane, But it's happening again. The market has rallied off 8 to 10% off the lows on the S&Ps within 4 or 5 days when nothing really has changed, in my opinion. What do you think, George? Do you think anything really has changed for that 8 to 10% move in 4 days?
The one thing that comes into mind, Milt, is perhaps we always talk about the sentiment. Do we see a slight change in sentiment with respect to perhaps the earnings are not horrible. They're not. We certainly have, although we have some of the larger companies that are really, I dare say warning. We have the IBMs, the SAPs, the McDonald's and Coke. So again, I view those as more important indicators. We talk about this. I view them as these microeconomies because they're so large. I think IBM has something like 451,000 employees across the globe. That's certainly not a small country, but it's rather large. But again, earnings haven't been horrible. They haven't been stellar. But I wonder if that's maybe putting in a bid, as well as, and we brought this up, the fact that this notion of perhaps extending QE, and this is that proverbial bid that comes into the market, Milt, and you've mentioned this many times.
Oh, it's all about the talk, George. It's one desk mentions it, and then boom, another desk hears it, and then another one. Then they mention it on TV. They start mentioning it on the papers and media, and then that's all the market needs. All you need is a whisper of something, and it'll be taken out of context, and who knows what could happen. Regarding the QE, we have, I think, 2 more days left of QE, in this month. And then, supposedly, it's over. So it'll be interesting to see, if the Fed comes out and, mentions a hint of another round of QE. But in all reality, you had the CPI 0.1%. So it was better than expected. So that in a way throws a little wrench to the Fed, does it not? With the
Sure.
little hotter CPI.
Sure, but one of the things that I've been reading over the last few days is even though remember, again, value judgment. I think, and from what reading the articles and reading what's out there, the reality is that the concern of macro, central bankers is this notion of deflation, because once deflation kicks in, and that becomes very, very worrisome, because then you lose pricing power, you lose a possible flow of capital. That, in my opinion, that is a greater risk to the global economy than anything else. I think inflation, frankly, I think is in check. Yes, I think the Fed wanting 2% inflation target, I think is fine. It's a good inflation target. If you take a look at it, we posted this maybe a week or so ago in the repository with respect to PCE ranges. Core PCE, they're right between that 1.5 to 2.2. So really nothing out of control with respect to inflation. I think their main concern is deflation. I think that's why they want to make sure there's a bid in the market. I think that deflation, excuse me. I think that's why, and they want to maintain some kind of normalcy. Frankly,
let me say this, George. What makes a market? Let me ask you a question. What makes the ideal market? Differentiating opinions.
Absolutely.
You mentioned the fact that you see no inflation. I mentioned the fact that I go out, and when I go shopping, George, I spend double what I usually spend on my groceries. I spend double what I usually spend on little products here and there, staples. So, in my opinion, when people tell me there's no inflation and they go through these numbers that the government throws at them, I tell them I'm spending, instead of paying, let's say, $100 a week on groceries, I'm spending $135 a week in the past year.
Sure.
So when people tell me there's no inflation, I say, where are you shopping? Where are you going? What are you doing? The consumer is getting hit on inflation. The consumer is paying 18 to 20% more on beef prices this year. You're paying how much more with milk and all this other little things, But that's where I sit back and I think to myself, people mention this, but what happens when the consumer is getting inflated, but we have deflationary in business? What happens if do we really know what the outcome could possibly be? And that's where I think we are in a point right now where we really don't know what could happen in a year or 2 years from now, because we've never been in this type of situation with 0% rates going around. The wage growth is not there. What will happen when the Fed does have to start raising rates, because eventually they're going to have to? What happens then? Like I said, a lot of people may think differently than I do, but that's what makes a market. That's the reason why we trade. That's the reason why the market goes up and down. It's all because of different opinions.
Sure. No. I agree. I agree with respect to coming down to the individual consumer, that food and energy. Granted, energy. Gas prices have decreased. Which is nice. But I agree. I think food is expensive. Down to the consumer level. When we talk about the macro level, certainly, central bankers discuss, what are the risks of, higher inflation, what are the risks of deflation, so. But I agree. I think also remember in the trading market, in no matter which what you trade, it's good to have the difference of opinion, because you don't want this complacency. Complacent markets are a little bit less interesting to trade. Wouldn't you agree, Milt? Than more volatile markets. So I agree. I mean, look, it would be difficult to not have an opinion in this market, but certainly from a macro level, there is a concern of some deflationary pressures. There's a concern of can they hit from the U.S. perspective? Can they hit the 2% target? But Milt, I appreciate that. It's a good feedback on that. What we'd like to do is jump into specific stocks. We're gonna bring the PowerPoint back here. So jumping into Ebola stocks, always in the news. And the important thing here is, watching the news to determine volatility. Certainly, volatility has decreased in Ebola names. Certainly this morning, overnight, Johnson & Johnson announcing they're to begin Ebola testing vaccine in 2015, contributing $200 million for research. For that specifically, the intention is to have them available, about 250,000 samples vaccines available for that. So again, this is on the remember, GlaxoSmithKline, GSK, also working on that vaccine as well. So again, really interesting to keep an eye on that. Some of the top insider purchases, MAT, we have Mattel director purchasing 8,600 shares at $28.88, currently indicating at $29.74. BP FH director purchasing 8,500 shares at $11.97. No indication yet for the pre-market. Elizabeth Arden, 10% owner, purchases just call it 560,000 shares at $16.99. Currently indicating at $16.76. ESPR, Esperion Therapeutics, director purchases 5,000 shares at $20. No indication yet for pre-market. SHLD, Sears Holding, 10% owner, purchases 144,000 shares at $32.74. Initial indication at $35.05. MLNK, MLNK, 10% owner, purchases 184,000 shares at $3.06. Currently, nothing indicating, but finished the day yesterday at $3.11 approximately. HSON, Hudson Highland Group, 10% owner, purchasing 220,000 shares at $3.36. Nothing indicating currently. It finished the day yesterday at $3.49. Moving on, again, important to note that these insider purchases, specifically on the director side, folks. These are not individuals that are making. These are not CEOs. These are not hugely senior level people purchasing shares with their own funds. So that's interesting to note on the insider purchases. And again, when you watch these insider purchases throughout the day, we have we'll put through this information through the newsroom. Typically, there's a larger reaction, certainly when markets are open from 9:30 to 4. As opposed to the pre-market. So again, just a bit of a caveat there. In a few things that are going through the news desks in the news. Certainly, Dow Chemical tops estimates on record plastics profit. Dow currently in pre-market at 50 even. LL Lumber Liquidators misses third quarter earnings per share by 10 cents. They guiding lower, so it's currently a little bit off their low in pre-market, currently at $49.88. Now remember, LL came out the other day with Tilson came out the other day that was one of his top shorts. So very interesting there, as larger investors, analysts come out in anticipation of earnings and their opinions on certain things. So again, watching that as well. That's Lumber Liquidators. EMC, EMC Corp misses Q3 earnings per share by 2 pennies, updates fiscal year 2014 outlook, currently at $27.14 in pre-market. Continuing on, we in the news, ANGI, Angie's List, we have it misses Q3 earnings per share by 2 pennies, guys. Q4 revenues below the street, so currently indicating right now $7.56. Also, German government, again, we'll pepper this in as we get information through the morning and pre-market. German government sources say decisions on economic policy in Europe will be made in December. EU summit this week should clarify procedures. Remember, folks, Germans, the German government finance ministry is slightly reluctant for easing, quantitative easing, QE style. Draghi has been discussing this over the last few weeks, initially signaling approximately about $1 trillion in covered bonds and asset-based security, backed securities. So keep an eye on that. Remember, the Germans tend to be a bit more fiscally responsible. So keeping an eye on that, again, value judgment. DDD cuts numbers. DDD currently 3D Systems currently in pre-market at $37.90. That's in pre-market quite a bit lower. Yesterday the closing was just around $43.37 mark. So again, quite a bit of a decline there. Continuing in the news, TXN. So a couple of things that are upgrades, downgrades that are being circulated around the desks. TXN, we have Texas Instruments higher in pre-market. Bernstein upgrades Texas Instruments to outperform, raises price target to 54. Currently, Texas Instruments indicating at $47.33. Coca-Cola, Societe Generale downgrades, SocGen downgrades Coca-Cola Company to sell, lowers price target to $37.50. Coca-Cola currently at $40.39. So again, this is on the heels of their earnings yesterday. Large organization, huge distribution channels being downgraded. So again, sometimes analysts are a bit late to the game there. CHK, Chesapeake Energy, UBS upgrades Chesapeake Energy to buy. Currently, Chesapeake Energy is indicating at $21.93. Yesterday's close was just right about the $21.68, so a bit of a higher open there. Moving on, Johnson & Johnson, certainly we've discussed this, commits $200 million to speed Ebola vaccine, anticipating early indication is January 2015, where they can have some human trials. Right now it's on animals, but it's positive indications for that. So Johnson & Johnson currently indicating at 101.70. Yesterday's close was right around that $100.40 mark. Yahoo, Bank of America maintains neutral on Yahoo. Raises price target to 48. Which is interesting there. So currently in pre-market at $42.35. That's B of A maintains neutral on Yahoo. CRE, we have Bank of America maintains underperform on CRE, lowers price target to 28. CRE in pre-market currently at $29.50. Yesterday's close right at $33.15, right at that. So a bit of a lower open on that. Apollo, APOL. We have So APOL, Apollo Education Group, Compass Point maintains neutral on Apollo. We don't have perhaps initial indication of $26.87 on Apollo. Continuing on, we have IRBT, iRobot in pre-market, up higher in pre-market reports. Q3 48 cents versus 33 cents. iRobot shows progress on all fronts. We do have a higher open in iRobot. Yesterday's close was right at $31.61. We have currently indicating a $35.70. So we have that. We discussed Angie's List as well. Sorry, that's in there again. BRCM, Broadcom. We have Corporation Beats, Broadcom Corp Q3 2014 earnings estimate. So we have a higher in pre-market. We have finished the day yesterday at just right around $37.36. We have at currently indicating pre-market $39.90. So a couple of more things, a couple more upgrades, downgrades here. We'll get through these, folks. HOV, Hovnanian Enterprises to Market Perform, maintains $4 price target, currently indicating at $3.87. So ARMH, ARM Holdings, upgraded to buy from neutral at UBS. ARMH currently at indicating at $39.60 in pre-market. QDEL, price target raised to $31 from $27 at Piper Jeffries. Nothing yet this morning. We'll keep an eye on that as we go into the open there. IBIO news out of there. Remember, this is an Ebola stock. Expands exclusive product collaboration with Novici Biotech. IBIO currently at $2.01 in pre-market. Also, we have RPRX making the rounds this morning. Repros Therapeutics reports long-term androxyl study data, currently in pre-market at $6.30. A bit of a spike in after hours yesterday. Currently higher in pre-market, but yesterday it finished the day at about $6.01, spiked up to about $7.46 in after hours. TKMR, another Ebola stock. TKMR, we have a higher this morning gains on new Ebola drug update. So currently at $20 even, actually coming into the pre-market. A few more things coming through just within the last few minutes. RGLS is up 165% on 3 times daily volume. So really, we want to keep an eye on that, folks. RGLS. This is Regelis Therapeutics, currently in pre-market at $16.72. Finished the day yesterday at $6.77. So keeping an eye on that. A couple of things: the U.S. dollar versus the Japanese yen moving to the highs of the day. Market has been a follower as of late, as of this indicator. So again, keeping an eye on that. Certainly, currency has been in conversation. Certainly, U.S. dollar, the rise of the U.S. dollars, certainly with the downdraft within the last few weeks. Also, GM to issue new warnings airbags. This is on the heels of other recalls within the last few months. So again, keeping an eye on that. So a bit tick up in the 10-year yield. We've seen the 10-year at 2.241, so a bit higher than we had this morning. Um, CAT, we have 8K. So CAT shows a September 3-month rolling total global machine sales down 10%. That's just coming through there. So CAT, that's Caterpillar, currently in pre-market at $95.95. So that's very interesting there. CLF beginning to make a little bit of news. CLF, Credit Suisse is making a potential and significant call on Cliffs this morning. So that's CLF. Let's take a look where the stock is trading this morning. Cliffs Natural Resources higher this morning. It went as high as $9.96. Currently trading at $9.10. A couple of a little bit of color on this. CLF, Credit Suisse First Boston team has been a major, they've been major bears in the team since late of 2012. Had a $10 price target on it since March 2013, beating everybody else's. And CSFB indicating, saying that we are bullish on CLF into next week's earnings. The magnitude of cost-cutting efforts is likely to surprise. Likely to surprise the street. So again, CLF currently at $9 and a penny. Sorry, $9.09 in pre-market. We have CLF finishing the day yesterday at $9.54. So folks, let's have a quick recap of where we are globally and coming into. Let's see, globally and see where we are in Europe. FTSE higher by 0.26%. CAC in Paris is higher by 0.36%. DAX in Germany 0.46%. And IBEX higher by 0.26%. So certainly an improvement over earlier this morning. We have the S&P futures basically flat. Into the morning, higher by 0.25 at 1938.25. And we want to thank you. And quick check on oil here. Oil higher by 45 cents at $82.94. Gold lower by $8.10 at 1243.50. So, folks, thanks for listening. Certainly a lot happening. Watching how the markets will react to this slew of earnings reports, and keeping an eye on this CPI data. Not a huge data, not a huge impact yet on the market. Looking for the 1030 numbers on petroleum and see if that has an impact on oil. Thank you for listening. This has been Unusual Activity, powered by Financial Juice with George Avedon and Milton Maimonides. Thank you for joining us, and happy hunting.